Oil prices are shifting again, and today Exxon Mobil stock is reacting right alongside them. But what's driving this move? Let's break it down simply. Over the past few days, news out of Venezuela and broader geopolitical changes have pushed energy stocks into the spotlight, as investors suddenly see a possible return of major crude supply channels back into the market, potentially reshaping how oil flows into the United States. Energy giants including Exxon Mobil and Chevron have added significant value, with combined oil stocks jumping more than $100 billion in market value after these developments. Even as oil prices have shown only modest moves, sentiment in the energy sector has strengthened, reflecting optimism about renewed supply opportunities and a rebound in crude prices. When oil sentiment improves, integrated producers like XOM often benefit because they're positioned to take advantage of both upstream production and downstream refining margins. Today's action isn't just about crude prices rising, it's about investors pricing in potential future access to large oil reserves and strategic supply changes. That's why Exxon Mobil stock is catching attention now. Keep in mind, shifts in oil markets can be volatile, and this is educational insight, not financial advice. If you want clear daily updates on U.S. stocks and market drivers, subscribe to Decode Finance USA.